Welcome into Clear Picture Financial. Your host is Jason Noble. You can find Jason right here, Prime Capital Investment Advisors in Charleston. And good morning, Charleston. Check out clearpicturefinancial.com. It is a great resource website for you. And a little bit more about Jason. He's a fiduciary advisor, holds his FINRA Series 66 securities registration, certified financial planner, and retirement income certified professional with 18 plus years in the financial arena. And what's he doing? He's helping his clients get ready for their retirement. I'm Morgan Patrick, consumer advocate. Each and every week, we hit the retirement topics. So we will get into this. There's been a lot going on. News headlines from out west, recent bank failures. In a nutshell, Jason, what happened?
Well, the news on Silicon Valley banking failure really sent many depositors into a tailspin as folks began panicking and withdrawing their money in an effort really to protect their deposits. This created a good old-fashioned bank run, and in conjunction with the lack of diversification and poor risk management, the bank had to sell more assets at further losses, creating even more issues internally. And I think we got to take a different look at this. Here's George Bailey from the movie It's a Wonderful Life.
I was just talking to old man Potter, and he's guaranteed cash payments to the bank. The bank's going to reopen next week.
But, George, I got my money here. Did he guarantee this place? I'll take mine now.
No, but you're thinking of this place all wrong, as if I had the money back in a safe. The money's not here.
And folks, I mean, that happened. People had a run on the bank. Same thing that happened in It's a Wonderful Life. So how did we get here, Jason?
Well, I think now the thing to know here is that the Federal Reserve, the Department of Treasury, and FDIC have all come together to establish what's like an emergency-style banking solution to calm the nerves of Americans, making a statement that their funds will be accessible even if they had deposits above the FDIC insurance limits.
Folks, I tell you, a lot of people are nervous. There's a lot of talking heads out there. Power Lunch on CNBC. They recently had Piper Sandler chief strategist Michael Kantrowitz. He was on, and he talked about this very thing.
The lagged effects of all of these policy tightenings from central banks, from commercial banks, and from inflation create the conditions for problems to happen. And so I think, this is one of several problems that we're going to be seeing down the road. Most of these are due to higher interest rates. Historically, the big problems arise when job losses occur, which unfortunately is a typical byproduct of the lagged impact of higher rates. So, our message to investors has been for quite some time now to be quite defensive and conservative, and that we still believe we're in a bear market, and investors shouldn't get too complacent on this idea that the economy is anywhere near recovering on a global basis.
Well, quite defensive and conservative. That doesn't mean run, but defensive and conservative. That's Piper Sandler chief strategist Michael Kantrowitz recently on the Power Lunch on CNBC. So, Jason, what is the FDIC insurance limit? Let's go over those numbers.
Well, $250,000 per depositor, per institution, per ownership category. So some key words there is the pure ownership category. So an individual transfer on death account, a joint account, and a trust account are three ownership categories. And according to edie.fdic.gov, that would cover $750,000 in FDIC insurance coverage.
Okay. These are numbers. People need to be aware of them. It is a nervous time, so just educate yourself. Now, is there something that we can learn, speaking of education, from what has happened, these bank failures?
Yeah, I always feel it's important to learn from your own mistakes, but also what can you glean from others' mistakes and what can you learn from this? And I would say there's really four things that were in common with SVB, Signature, and Silvergate Bank. Number one is that they had very niche business types. One was focusing on venture capital, while the others were invested in crypto assets. Number two, hyper growth in a short period of time. They were growing significantly in a very fast period. Number three, they did not manage their risk. And number four, due to that poor risk management, it caused concerns on the depositors, and a good old-fashioned bank run started. So there are some things that I think we could learn from this. The number one thing I think we could learn is diversify. Don't put all your eggs in one basket. That's what these banks were doing. Don't do what they did. Number 2, do not just focus on growth. Focus on proper risk management. We say this every single week, at least 4 to 5 times every show, that we focus on risk management first to get to the returns. Well, obviously these banks didn't do that. And look what happened. And this is the thing I'm going to say is if these banks didn't manage their risk, they got the bailout from FDIC and the government coming in. Wait, who's going to be left holding the bag if you're not managing your own risk? Right? And so this goes into the number 3 thing. If you don't know how to manage your own risk or even find your own risk, well, then how do you manage it? This is where you go to clearpicturefinancial.com and you could click on Find My Risk Number at the top of the page. And that's where you can find your risk number in an easy to understand way. We want to make this easy for those that are listening. Go to the website, find your risk number. And then the second thing is, what is your risk on your portfolio looking like? And I'm going to tell you, Morgan, I'm having a lot of these conversations and they're saying, hey, my risk right now on a scale between 1 to 99 is coming in at a 45 and their portfolio is at a 75.
Wow. Big
right?
difference. Big difference.
Massive. So their money isn't matching where their mouth is. So there's that part. But the other part of it as a professional is I have to take into account what's called risk capacity. Risk capacity is not based off of a survey of your risk number. No, this is based off of your financial plan. How much risk should you be taking within your investments so that you could reach your goals? So this is why people are then calling in to then schedule those conversations.
I tell you, folks, opportunity to get on the counter with Jason Noble and his team at Prime Capital Investment Advisors. We have a limited number of spots, 10 for the show, and these are no cost, no obligation, and simply no pressure. You can call and book at any time, and there are 2 ways to do it. Call this number, 843-743-2926, or you can text NOBLE, that's N-O-B-L-E, to 600-700. Again, NOBLE, N-O-B-L-E, to 600-700. Again, just 10 positions. They are open now, and you can book at any time. So there's concern. We've had the bank failures. You've explained that very well, Jason. I mean, it's not panic time, but people are still pulling their money out of the market. And guess what, folks? Here's the next one. Cash does not equate to any investment strategy.
Well, it's important to keep in mind that cash in the bank is not an investment strategy in and of itself. While cash certainly is one element of a comprehensive financial strategy, your overall financial plans consist of investments, asset allocation, diversification, and a myriad of other financial tools. If you do not have a long-term financial plan in place, the recent financial headlines may have brought on fear, concern, and panic. But if you do have a plan in place and if you talked with your financial advisor about the state of the economy, it's quite possible you don't have an adverse reaction to the news. But this is the thing. Are you calling your advisor or are they calling you? Right? I mean, I think this is a situation where advisors need to be picking up the phone and having these conversations, as many clients as they possibly have, because those who have concerns and those who don't know they have the concern yet. And this is why we're being proactive.
Well, let's talk a little bit about just some areas that you can have these types of conversations with your advisor when it comes to banking and retirement. Again, we've got certain areas, so let's hit them real quickly. Liquidity, time horizon, risk, and then we'll get you to surmise for us. But again, those 3, liquidity, time horizon, and risk.
Well, liquidity is really how fast can you get access to the money? And it's essential to have access to the cash rather swiftly in case something comes up with an emergency situation. So, and that's really, and also to have a sustained standard of living. Mm-hmm. Time horizon is knowing when is essentially for developing that holistic comprehensive strategy for you to reach that goals in retirement. And then as far as risk goes, while maintaining wealth and creating stable lifetime income are 2 important retirement goals, it is also vital to diversify your portfolio so that your assets are never really completely exposed to the vulnerabilities like market volatility, inflation, recession, and bank failures. So I'll just say, here's the bottom line. The bank crisis is truly reinforcing the lessons you should never put all your eggs in one basket, especially when it comes to retirement planning and your financial future. The best way to combat the potential economic downturns, inflationary pressures, and volatility market conditions that have been really time-tested and true, where you have a balanced, structured, and comprehensive plan created by a professional who can guide you through your options and help you meet your financial goals.
Jason, how important is it? You brought up the communication part. I mean, you are in touch with your clients. When things like this happen, you're not waiting on them to call you. You are reaching out to them. How important is it to maintain that open link of communication, but also when you're having these conversations that your clients have that open mind? If you need to pivot, you pivot.
Well, I think communication is the backbone of any good relationship, right? And it's a two-way street. If I see things that are happening, it's my responsibility to my clients to be proactive in that communication. So last Saturday, this is right after the bank failures of SVB, I did a 9-minute video, created a blog, got that over to our media department so that they could, get compliance review and everything.
Sure. Yeah.
And we kicked that out to all our clients. My firm, Prime Capital Investment Advisors, on Thursday, we had an all hands meeting for clients and anyone to come in to hear what our chief investment officer, Scott Duba, was thinking about with everything that's going on in today's economy and the market. So what I'm getting at is that's a form of communication, email, video,
Sure.
Webinars, but then also just picking up the good old-fashioned phone.
Well, I mean, you said it. I mean, it's a nervous time. People want to know what's going on, and just sitting on your hands, you're not going to get answers to those questions. So communication so very key. So speaking of everything that we've been talking about, and with all the recent news with what's going on in California, obviously, and what's going to happen with FDIC and how that's all going to happen, let's open up some spots on your calendar. We have those 10 positions, and these are no cost, no obligation, no pressure. What's going to happen for these next 10 callers, these 10 appointments?
Well, listen here. I would say it's time to take action. Be proactive and not reactive in this current market that we're in. Take that first step by calling in and speaking to one of our specialists that will schedule a core values meeting. That is where we get to know your story, the story of your money, and any concerns that you have right now. Then we'll review your portfolios using a risk-first approach. We review your taxes, estate plan, and your retirement income strategies. We want to put a peace of mind to your wealth plan for the rest of your life, providing a clear picture analysis. This review is complimentary for the next 10 callers, but you have to be proactive and take that action now.
All right, get on the phone. Here's the number, 843-743-2926. Again, 843-743-2926, or text NOBLE, that's NOBLE, to 600-700.